Hello, and welcome to myfinanceteacher.org. Let's have a look at gold again, and as usual, I want to start with the chart of the US dollar. DXY index is in front of you, and I think the daily cycle, the short-term daily cycle on the US dollar is about to give us a daily cycle low. Usually, over the last few years, the daily cycles lasted for around 2 months on the US dollar. Of course, sometimes they can stretch. The previous one lasted for about 3 months instead. The current one is 69 days old. With the red candle today and with the support zone not far below the current prices, I think DXY wants to come down a little bit lower before starting a new short-term daily cycle. The support zone below is anywhere between 91.3 to 91.6, and that's based on a number of factors, obviously including the 50-day and 200-day moving averages. And additionally, over the last few months, we've seen several highs and lows retest this level. For example, this early February high, this mid-March low, and this early May high. Those are all in that same price level as well. So with so many factors pointing to the same level, I think there is going to be some sort of a bounce from that 200-day moving average into the new short-term daily cycle in the US dollar. Whether the dollar will create a new high in the next short-term daily cycle or not is not extremely important at the moment, perhaps, because in either case, the general idea is while gold might still continue to be relatively strong for another few days, I think a correction into the short-term daily cycle low in gold is likely to happen, and the likely strength in the US dollar over the next few weeks might contribute to some softness in gold. Looking at the 14-day RSI on the US dollar, we've seen that at the previous intermediate cycle low in the US dollar, the 14-day RSI came close enough to oversold. And as the intermediate cycle is still relatively young, they usually last for around half a year or longer on the US dollar. A correction into the short-term daily cycle rather than intermediate cycle low doesn't really have to bring this 14-day RSI that much closer to the oversold levels. And looking at the correlation between the US dollar and gold, we see that it's not that far from zero at the moment. So even if dollar bounces into the next short-term daily cycle sometime relatively soon, perhaps the correction in gold is not going to be very strong. Let's have a look at the 10-year rate, and I think 10-year rate still has some potential to bounce a little bit further, perhaps to retest this 200-day moving average before continuing to drop. A couple of weeks ago, we've seen this positive divergence on RSI, where the price has created a lower low and RSI has created a higher high. And by the way, the last time I looked at the rates, I mentioned that this positive divergence was quite likely to take place, which it has. And a positive divergence usually precedes some sort of a bounce. We've seen a bounce over here into late July, but I think it's not really enough of a bounce yet. So if rates continue to be strong for a while over here, perhaps that also is going to put some pressure on gold prices over the next few weeks while these rates retest the 200-day moving average. But after that, I do expect rates lower and a new explosive rally in gold. So let's switch to the gold chart. The ongoing short-term daily cycle is 34 days old. Usually these cycles last for about a couple of months, sometimes shorter, sometimes longer. So we are perhaps just past the usual midpoint of the cycle, meaning that my most likely scenario for gold right now is for gold to continue lower for 2 weeks or maybe longer into the short-term daily cycle low, as well as the intermediate cycle low. The intermediate cycle starting from March this year so far has been going on for around 5 months. Usually these cycles last for about half a year. So I expect a bit of a correction into the intermediate cycle low perhaps over another 1 month or so before, as I mentioned, that explosive rally in gold is likely to happen. We see that the Bollinger Bands are narrowing. Narrow Bollinger Bands usually precede some sort of a trending move. And with the daily cycle perhaps past its midpoint, I think it's a little bit more likely that the trending move is going to be temporarily to the downside, poking deep below Bollinger Bands before exploding higher. So I would give this scenario perhaps a 60% chance. meaning that the less likely scenario still has quite a high chance of around 40%. And that's a scenario where the intermediate cycle in gold did actually finish over here in late June, early July, lasting for only 4 months rather than the usual 6 months. In that case, we have a new intermediate cycle in gold already, in which case the general trend in gold is already going to be to the upside. So perhaps a bit of a meandering to the upside and a shallow correction into the short-term daily cycle low before continued rally into the ongoing new intermediate cycle. In this case, the correction into the daily cycle low is, as I said, going to be relatively shallow, with perhaps a new higher high in gold coming relatively soon. This, as I said, has around a 40% chance of playing out. And to be honest, whichever scenario actually plays out, I think if you don't have any allocation to precious metals, it's a good idea to have a sizable allocation already. As I've mentioned many times in my previous videos, I already have close to a full allocation, close to a quarter of my total portfolio in precious metals related assets. Next, let's have a look at the Optimism index in gold. And looking at this previous late June, early July high, we see that the Optimism index and the 10-day moving average of this Optimism index actually came close enough to the levels that accompany an intermediate cycle low. And we see the correction in gold price was quite severe. So it's quite likely that prices just continue trending upwards with some minor corrections over the next 3 to 4 months. Although, as I mentioned, I still think there is another last move lower to create that panic and that blood on the streets in the gold market before the long-term bull is ready to continue higher. And talking about that long-term bull, one chart that might be interesting over here is the number of cases in the US as well as the number of deaths related to those cases. It's a bit of a sad topic, but it's perhaps worth looking at it. I think one could say that the deaths are lagging a little bit behind the number of cases. For example, the new wave of cases back in middle of 2020 started perhaps a little bit earlier than the new wave of deaths. It topped perhaps a little bit earlier than the wave of deaths did. And another strong wave in late 2020, you perhaps might say that it started a little bit earlier than the corresponding wave of deaths, and it perhaps topped a little bit earlier as well. Unfortunately, what we're observing over here is a new wave of cases rising over the last few weeks. And so looking at history, unfortunately, it's likely that this lower chart might start rising as well relatively soon. And if that weighs negatively on the economy, then that might actually push the gold market a little bit higher, perhaps sometime in the intermediate term into that new intermediate cycle after that last short-term correction. And lastly, before we finish, let me ask you a question. Coming back to the charts at investing.com, I've noticed that while the horizontal axis on the charts is fine here in my office back at home, it often is kind of empty, missing a lot of these dates. And the same actually happens on a range of browsers, including Firefox. I'm not sure if I tried Chrome, but I have tried Microsoft Edge. And the same empty horizontal line also takes place in an incognito window. And at the moment, I'm not really sure how to fix that. So if you guys have any suggestions on what might be happening with this horizontal line, I would really appreciate your input back in the comments below. Thank you very much and good luck in your trades.